Recording. Hey, are you wondering what the coronavirus is doing and how it's affecting the mortgage market? I'm here, Cory Boldroff, the real estate guy. I have the man, the myth, the legend, Mike Mina with Augusta Financial, the 6th largest brokerage in the nation. So I thought he'd give you a lot of insight and depth to it. Hey, Mike, how's it going?
Hello, Cory.
How's it going?
What's
Good.
happening, man? Everything's perfect. How about with you?
Perfect. Yeah, just busy working away. I am at home working. I have 6 kids, so if you do hear noise in the background, I do apologize. But Mike, I kind of wanted to give kind of your insight and your knowledge and expertise. I first want to start off of where the market was, at the end of last year to this year, as far as mortgage rates considered, mortgage loans and programs. How did that look?
Well, I'm going to start with the beginning of last year when it was really slow to start, and rates were definitely 1% to 1.5% higher than what we are right now. So then you fast forward, as the rates went down throughout the year, the volume of business kept going up and people got more and more excited as we got towards the end of the year. And we had a super busy Christmas, which you never have in the mortgage and real estate industry. And we had a hop in January and a great February. And then this thing called the coronavirus came. And what's really weird, Cory, is we had people fall out of escrow as soon as we jumped into this thing, and they're like, okay, go under house arrest or whatever they're calling us to do.
Right.
These people, they went home, they canceled escrow, stopped everything, the world stopped. You know what happened? House went back on the market, and guess what? Sold again.
Yeah.
Immediately. So we have a certain amount of escrows out there, a certain amount of houses to be found. And then now we've got these clients that, how do I want to put it? These clients, there's only a certain amount of clients that are looking, but there's only a certain amount of listings still. And the people that are looking, it's like doing business at Christmas. They're serious. They want to buy now. They want to sell now.
Right. So, I heard a little bit of a story that we're come to like February, end of February, there was actually a refi boom, so much so where mortgage companies were holding on applications and artificially raised the rates. Was that true? Is that a true statement?
Yeah, now that happens at the real base level of real estate loans. So what happens is, you say your big banks, there's probably 15 or 20 huge banks that buy these loans on the secondary market. Those banks are inundated and they've got enough business to last them for the next 5 years. I can tell you with what we did the first quarter this year is probably what we did in the first 2 quarters last year.
Wow.
So banks are super duper busy. And that's just kind of how it goes right now. So they're between that, sending people home to work, sending people wherever, not having full staff, having servicing companies in India where they've got the coronavirus issue going on. All of those things together have caused rates to be artificially higher than they should be.
Copy that. Okay, and so we're coming into this coronavirus. We're in the pandemic. Loans are still able to be done, which is great news. It's great news to me. If someone's thinking about refinancing, should they try to refinance now? What should that process look like?
Well, I think depending on where their rate is, if they're paying PMI or anything like that, I think now's a great time to refi. Okay. We've had, I want to say 57 months under 4% in the last 60 years.
Wow.
So this is a good time to refinance.
Okay. There we go.
Did I lose you? Oh, I thought I lost you there for a second. So, but again, a lot of people think that rates are going to go lower. And if they go lower, that's a great time to refinance too.
Okay.
I would say this is not the best opportunity or the best time that we've seen, but it's pretty good.
Okay. And do you think they should get the applications in now, and that way when the rates come down, you can lock them in kind of deal?
Yes, absolutely. If they're wanting to refi at say a 3 or 3.5% rate or 2.75 or whatever that is, get us the paperwork now. Guess what, Cory? I got a cough.
Cough away. Get to this
I don't know what that was. I swear it's not the coronavirus. And if it is, I don't think I'm contagious to you.
There you go.
So really quickly, I think that it's a good time to refi, depending on where you're sitting right now on your interest rate. It's a great time to pull a little bit of cash out. It's a great time to look at where we're going to be 3 months down the road and go ahead and refinance 3 months down the road if that's what you can do, if that's where rates are the best.
Okay, perfect. And, I've, in my opinion, when this, safer at home order is lifted, when, you know, the stimulus package is in full effect, I see the rates coming back down, it creating a buyer boom and the real estate market continuing to go up, maybe one of the best years we ever had. How do you feel about that opinion?
Yeah, well, right now there's so much margin in what we are doing that rates should be 0.5% lower than they are right now. We haven't even seen the worst of it yet with the economy and how bad the economy really is. The economy is just touching the surface of bad, and it's going to be really ugly when we see what all the job losses are, and then when everybody goes back to work and they're regrouping and trying to refigure out everything. And you know, there's a lot of people that are out of work that would not have normally been out of work, daycare people and stuff like that, that aren't working just because people don't want them around their children. They don't want to bring in whatever else it is, and they don't want children around children. So there's a lot of things, but rates are about 0.5% higher than they should be. So that means we should be somewhere in the high 2s, low 3s if everything was normal. But the banks are just sitting there fat and happy going, hey, we'll take that loan, but we're going to take a little bit extra off the top. It's kind of like, you know, the old mobsters used to do, but they can do it legally because they're the big banks.
Because they're the big banks. All right, perfect. And, you know, there's been some talk and some scare tactics being used, even some real estate agents not truly understand the market of like, hey, we're going to come into another 2008 crash. I keep saying we're not in the same position. There's not crazy stated income loans. You have to have a decent credit score that you actually paid some of your creditors. And there's a lot more equity. People, I think we're at a 4.2 trillion, if I'm not mistaken, in equity. So I believe we're in a lot better position. And I believe we're at an all-time low for luxury items, meaning that in 2004 to 2007, people were taking out money out of their house and buying a motorhome or a Mercedes. And then when the market crashed, they went down. Would you kind of agree with that? Or what do you think, comparing us now to then of 2004, 2007, 8?
Well, I think that where we are right now, we have so much more equity in our properties than they did then. Remember, everybody was pulling a little bit of cash out, and they were doing 100% financing, stated, and they were buying, everybody was an investor. So when the investors were investing and they were putting zero down and they're buying a property and they're jacking up the prices in the neighborhood, well, the last guy standing was the one who ended up got stuck holding the bag. This time people have so much equity, it's not going to matter. And what you're going to see is if interest rates drop, and I think they will, and I think you agree, when interest rates drop, if prices drop even 5 or 10%, what's going to happen? Investors are going to be in there going, let me have it, because I can still rent that property, that $500,000 property, for $2,500 a month.
Right.
And now my mortgage payment is going to be $300 less than it would have been a year ago. And the price of the house went down 5% or 10% or 3% or 0%. It doesn't matter. The investors will jump on board as soon as we have a 5% drop in this property values, because their rents are not dropping. I don't see rents dropping.
No, I don't either. So I give, this is my opinion, and this is what advice I give to my clients: take out as much cash as you possibly can, as long as you're responsible and you're not going to go out and buy the motorhomes and the Mercedes, but pull out that cash, because that cash is sitting in your bank. If we do have a downturn in the real estate market, or the economy has a spike, or someone's industry is affected and they don't have a job, cash is king, that they can survive. They won't get foreclosed on, rather than allowing the market to come down and them losing that equity and then being maybe in a position closer to 2008. Would you agree with some theory like that?
Yeah, it's funny you say that, because I have a friend of mine who had a big line of credit on his house, and he just pulled like all of it out because he was afraid the bank was going to stop it under the pandemic situation. I do think that we need to have a certain amount. And I have an old friend, he's funny, he's a composer and he's in the industry. And he would call me when we were young, he'd go, okay, I've got 4.9 months worth of savings in my savings account, because I got 4.9 months. Then I hear from him 2 months later, I got 5.4 months. And now he's probably got 540 months, and I don't even think he'll live that long. But he is a saver. And I think that's what we have to do. We have to put a certain portion aside for saving. If you don't have that savings, debt is the devil. I don't know, it just has the first 2 letters are the same as devil, but debt and devil are pretty much the same thing, right? Just in a different disguise. So don't get that credit card debt. Don't get that expensive car. Don't get those things. Put that money aside. Hold it. Yes, if you have to pull a little cash out now, to save for your rainy day? Yes. But for some of you, it's too late, because if you're not employed right now, you couldn't even refinance. If you're on furlough or whatever it is, that might be a tough thing. But if we're going to learn a lesson here, we have to learn to save. We have to learn to save, because today's a rainy day and it's going to be a rainy month. So hopefully we save for this, although the government's going to do a pretty good job of bailing us all out, I think.
Yeah, no, I read the stimulus package, and it looks like there's a safety net for employees and businesses. So I think the economy is going to bounce back pretty strongly. I do believe we're going to have a huge buyer demand. And I also believe if you're unhappy with your house, or you wanted a bigger house, or you wanted to downsize, this last month is going to make you realize that you're going to do it this year. I think this is the year to do it. I do see a slowdown in the market come next year, but I don't see a crash. I think you agreed with that statement. There's just nothing to support that in reality. You know, and people are like, oh, well, Zillow and OfferUp and Open Door, they're all pulling out. That's because they're investors that are sitting in a computer in Seattle, Washington, and they don't care about local communities. All they're caring about is, oh, I can't kick out the tenants. Oh, I can't kick out the homeowners. That's why they're canceling, in my opinion, not because real estate became a bad investment. I think real estate's always one of the best investments. I believe you hold the same thing. You're probably one of the people that I know that personally owns more real estate than the average, even savvy investor. I mean, you use real estate. you use real estate very, very well, and I try to catch on and learn from you. So if anyone's thinking about like creating their retirement fund through real estate, Mike Mina is the guy to look after. He will give you a bunch of information, and your head will be like spinning around, and to the point where you go, Mike, just here's the money, or here's my credit. Go tell me what to do. I'll do it. And then hopefully you'll use me as your real estate agent. But yeah, Mike really knows what he's doing.
Cory, I want to touch on one thing you were just talking about too. This is a very good time to maneuver also. So let's say, for instance, I'm 55. I'll be 55 this year. I've got 4 kids. 3 of them are in college. 1's going off to law school. Let's say I'm your average Joe. I'm in my house. Let's just call it 2,600 square feet. It might be a little bigger than that. But I'm in that house, and it's really going to be me and my wife. And right now I've got 1 kid living in the Valley who's going to law school. 1's in Texas. She's going to school there, but now she's hanging with her boyfriend. She doesn't want to be with me, but she's annoying anyway. That doesn't matter. It's not about me. But let's just take this, and let's say I'm an average guy, and I've got an $800,000 house, and I could take that 2,600 and easily move into 1,500 or 1,600 square feet, and buy another 1,500 or 1,600 square foot house. And even though my rate's 3.25 or 3.5 on my house now that I got back in 2012 or 16 or whatever that was, I can now move out of that house into 2 more, buy this one and buy this one, and really establish my retirement with a much lower payment. So this is an opportunity with these rates this low. This is going to be the best opportunity you have to move down, because we all get older, even though I look great for 55.
Yeah, you do.
Oh God, I'm hot. No. So what I'm saying is this is a great opportunity for us to move down and to maneuver into wherever we want to do. And if we're a young buyer, we bought this first house and now need a bigger house, great. Interest rates are lower. This is a great opportunity for you to make that move up.
I agree. Well, I don't want to hold you up. I thank you very, very much for your time. Again, Mike Mina with Augusta Financial, Cory Boldroff, the real estate guy. Anytime you guys just want information, we're both just available by our phone call. Mike actually probably almost works, I'm going to say, I don't say this often, but you might work longer hours than I do. I mean, I've had clients call you at 9 p.m. and you're there at the office answering your cell phone. I'm like, yeah, Mike's always available. Saturdays, Sundays, 9 o'clock at night. Like, you know, his wife might hate you, but he'll answer the phone. So, you know, and you're never pressuring anyone. You just want to give information. I love that about you. And that's why I always entrusted my clients to you. So I appreciate that. Reach out to us, guys. And Mike, stay safe and healthy, please. And enjoy the beach behind you.
Oh yeah, it looks beautiful. Unfortunately, there's just my desk, but in front of me. You kind of see how I wobble in and out. It's kind of, but I like that screen better than looking at the back of me. So it's all good.
Cool. All right, Mike, take it easy. Thank you so much.
All right, peace out.